Hi, I thought it would be fun to go through an intensive analysis of a company to really dig into the details and show you how well we can understand a company in not a lot of time, maybe 2 days work in total. Now, I can't take the credit for finding this company. This one is courtesy of a very smart investor, Anvar Mosayev, who reached out to tell me about the company. Now, people are going to give you hot tips all the time. Today's video, if anything, will show you how to analyze a hot tip that someone mentions to you. Look, many times people read an article or watch a YouTube video and then invest. Well, that isn't enough work, really. It just isn't that easy. You need to truly understand what you are investing in. Now, if you're new to my channel, well, welcome. My videos about investments that anyone in the world can make. And I've based a lot of my knowledge on the great investors, Peter Lynch, Warren Buffett, Charlie Munger, Monish Pabrai, Phil Town, and a handful of others as well. And what I've been doing lately is building a checklist. This is essentially a list of all the questions I want to answer before I feel like I understand the company. I'm still adding things to this checklist and it will be evolving probably over my entire career. But this is what I have so far and it has been serving me very well. The company that I will be using as the example is Markel, which has been described as a mini Berkshire Hathaway. Now this caught my attention as Berkshire Hathaway is probably the greatest stock of all time. So if there is any chance that we're witnessing a young Berkshire Hathaway, well, I need to investigate that. So let's investigate that together. So this is the first section of my checklist. These are the questions I want to answer to make sure I actually do understand what I'm researching. If I can answer these questions confidently, then I can move on to the next part of the checklist. This is like an industry understanding. Do I think I can easily understand the business? Or maybe not now, but it just shouldn't feel like it's going to be too hard. Then it's what gurus are investing in this company. Do I like the industry? Is it in a no growth industry, which is actually okay? Is it in a boring industry, which is also okay? What type of investment is it? Is it a fast grower or a stall or the slow grower or something like that? Does the company have reasonable, simple plans for growth in the future? Is the market cap bigger than $10 billion? And how big could the market/business potentially be? So let's start by doing a little light reading to get a basic understanding of the company. Look, I had never heard of this company before, so I really was starting at zero knowledge. So the first thing I do is I go to Value Investors Club and I search for write-ups. These are done by other investors. I definitely don't trust completely what they say, but it is a good place to see what the company is about and how other people understand the company. Look, I think the writers here have put a lot of work into these documents and are a really valuable resource and a great starting point. So I found that Markel has 3 write-ups since 2010. Now I'll briefly read them all. Just the first 2 to 3 paragraphs of each article at the moment. This should just give me a good basic understanding of the business. Look, before I read these articles, I still had no idea if this company is a tech company, a health company, a car company. I had literally no idea at this point. Okay, so here are some little pieces of the write-ups from Value Investors Club. This first one is from 2010. Markel is a specialty property and casualty insurance company that has compounded book value per share at an annual pace of 23% from its 1986 IPO through the year end 2009. Okay, now taking this next piece from 2013's write-up, and it says this. For those of you unfamiliar with the company, Markel is a diversified specialty insurer, mainly focusing on niche business lines with good pricing, repeat customers, and consistent underwriting profits. And all of these things serve as a backbone to a remarkably well-managed investment portfolio, headed by famous value investor Tom Gaynor, who has compounded portfolio per share at 13% CAGR over the last 20 years. He has actually 2/3 of his net worth in Markel stock as well. Now, this is in contrast to big insurance companies that write business in large, highly regulated categories like life insurance. Markel has actually developed an edge in often complex products where risks don't fit predefined criteria. It basically seeks out policies that are hard to place, meaning that the risks can't be underwritten with off-the-shelf products generally offered by plain vanilla insurance brokers. Here are some examples of the niche markets that they work in: wind and earthquake exposed commercial properties, liability coverage for highly specialized professionals, horse mortality and other horse related risks, personal watercrafts, high valued motorcycles, aviation and energy related activities. And this last piece I got from the 2019 write-up. The company was founded in 1930 to sell insurance to taxi cabs and buses and remained a family business until its IPO in 1986. Today, the company underwrites specialty insurance products in a variety of markets around the world. Markel repeatedly states that its financial goals are to earn consistent underwriting and operating profits and superior investment returns to build shareholder value. over a long period of time. Over time, Markel has clearly achieved these goals. Since its IPO, the company has been remarkably successful, having compounded shareholders' capital at nearly 20%, compared to roughly 10% over the same period for the S&P 500. Okay, I think I can now answer question 1 on my checklist. I already have some experience studying insurance companies, and I have looked into Berkshire Hathaway before. So for me, this actually won't be too difficult. But for those of you out there, you might have no experience in this field. Maybe fashion or something like that is an easy industry for you to understand because maybe you're a fashion designer. Or maybe you're a doctor, so the pharmaceutical industry is easier for you. But just stay with me because I think this is actually a really easy business to get your head around. And even if you don't know anything at the moment, I think by the end of this analysis, you will actually know a lot. Okay, so now I've read a little bit more. I have read actually all 3 write-ups, and I also read a great report that Enver sent me when he told me about the company. It is from John Huber at Saber Capital Management, and I'll leave a link in the description because it's a really great read. Okay, so this is what I've gathered so far. So, Markel has 2 parts to their business. The first part is the insurance, and the second part is the investing the money generated from the profitable insurance. Okay, from the insurance side, they have a focus on specialty insurance, which is pretty interesting. Something that gives them a real niche in the insurance world. Normal insurance companies just can't calculate the risk of these weird things like moving art between museums or transporting horses internationally. There is definitely an art to writing these insurance contracts. Markel has years of experience doing these weird contracts that they have far more understanding of the risk. So they have separated themselves from those big insurance companies. Now, to measure a good insurance company that is doing good work at understanding the risks, the metric to look at is what's called the combined ratio. Essentially, this means that for all the money that people give the company, if Markel pays out more in claims than this money, well, the combined ratio will be above 100%. If it is below 100%, then they are receiving more money than they're giving away. Now, Markel has averaged about a 97% combined ratio over the past 10 years compared to the industry average of 101%. So they are better than the average insurance company. This money that they can collect is why I find the insurance industry so interesting. This money is called the float, and it's like a massive loan that bears no interest and doesn't have to be paid back. Now, here is another important point from the 2018 annual letter. The company said this: when we believe the prevailing market price will not support our underwriting profit targets, the business is not written. Now, I actually think this is one of the critical findings of my research so far. What this means is that even if they have to say no to potential clients and turn away revenue, they will do this if the mathematics are not in Markel's favor. And the reason they do this, unlike other insurance companies, is because the incentives of the employees are in line with the long-term prospects of the business. And that's very important. Markel rewards its employees for writing profitable contracts rather than the actual volume of the contracts. Most insurance companies pay their employees bonuses for landing a client, but not at Markel. A profitable contract is more important. And this is great news as the incentives of the employees are aligned with the shareholders. And this is really critical and a big positive from an investment point of view. Okay, now that's the insurance part of the business, but what goes really nicely with the insurance part of this business is the investing part. Essentially, it's the same concept as Berkshire Hathaway. Markel generates money from insurance profitably and then invests this money in the stock market and acquiring businesses. Markel invests more in stocks than other insurance companies, which does mean higher returns over the long term, but more ups and downs. Not a problem for a long-term investor. See, other insurance companies don't like the ups and downs of their money. They would prefer to see stable 4 to 5% per year reliably, rather than the 10% down year and the 25% up year. This is what separates Berkshire Hathaway and Markel from the rest. The management team just doesn't care about the short-term volatility. And if you have watched some of my videos before, you will know this is exactly how I think as well. Okay, now you might be thinking, where did I get all of this information from? Well, I got it all from other people's research. And I'm not ashamed to look at other people's ideas. I think it is awesome that we can find multiple opinions online and help decide whether this investment fits with my checklist. I also just typed into YouTube Markel and watched a few videos of the CEO speaking. That's pretty much it for now. I read a few write-ups about the company, I watched a few YouTube videos, and that gets me interested or not. So now let's go back to my checklist. So the first question was, do I think I can easily understand the business? And the answer is, well, yes, I get it. I actually find it interesting as well. Now, look, I'm not smart enough to actually calculate the risk of insurance policies. I'll leave that to the maths people out there, but the business model makes sense. The next question is, what gurus are investing in the company? Well, Tom Gaynor, the CEO, is actually a super investor himself, and he has 2/3 of his money in Markel. Chuck Aker is another super investor who owns part of Markel. Now, I actually don't know much about Chuck. I don't know his investing style, so I'd want to look a little bit deeper into that. Christopher Davis is another super investor with a decent stake in Markel. I actually like the look of his portfolio with Berkshire Hathaway, Amazon, Facebook, and Google as his top 4 holdings. Great companies. Now, the next question is just, do I like the industry? Like, I hate cigarettes, I hate the car industry, but for insurance, yeah, I do like this industry, and I've studied it before, and I really like the business model of getting money up front and using that money to invest before making claims. The next question is it in a no-growth industry? Now, insurance is actually growing and expected to grow further. It's actually expected to grow a lot throughout the world in places like China and India. Insurance is one of the longest standing industries, and I'm sure it'll still be important in the future. The 5th question is it a boring industry? And this is definitely a boring industry, and this means that hype shouldn't be an issue, not like electric cars or something like that. The 6th question is, what type of investment is it? Is it a fast grower, a stalwart, an asset play, something like that? And this is just for me to understand, like make sure I really understand the company. So in my opinion, it is a stalwart. Stalwarts are strongly built companies with great balance sheets. Growth rates tend to be between 10 to 20% and have proven this for long periods of time. They're actually really good companies. The next question is, does the company have reasonably simple plans for growth in the future? And well, simply yes, they do. They all have to do is continue to write profitable insurance products and invest the money for the long term. They have been doing it already for decades, and they just need to keep doing the same thing, and the business will grow very impressively. The next question is the market cap bigger than $10 billion? Now, I actually want to see companies under $10 billion generally, because it just means they have a lot more opportunity for growth. Because look, Apple is a $2 trillion company, for example, and look, $2 trillion going to $10 trillion is really going to be really difficult to do. But for a company that's under 10 billion to go to say 100 billion is a lot more feasible. This isn't super important because those big companies are still good investments, but in this case, Markel, unfortunately, is just fractionally over that 10 billion mark at 13 billion at the moment. But look, it isn't really that far away from 10 billion. So the 9th question is a bit of a follow-on, which is how big could the market or business potentially be? So considering the style of business it is, Berkshire Hathaway is the lead example, as it is nearly the same business model. Berkshire is at $500 billion and growing. So I think Markel can copy that path, the Berkshire Hathaway path, with continued good investing. Look, definitely huge potential over the long term. Okay, great. So I understand the business and I have an understanding of their place in the industry as well. Look, it's not perfect and I'll learn a lot more, but it's definitely enough for now. In the next video, we'll keep diving in and look at the competition and how good the company is. Warren Buffett would call this the moat of the business. I really hope you follow along with me as we analyze the company together. I would actually really love to hear more points that I could add to my checklist, and maybe you have your own checklist. I actually highly recommend having one. It will help you feel so much more confident in your investments and will help you make better decisions. Something we can all improve is our decision making. So look, don't forget to subscribe so you don't miss my future videos, and I will see you soon in the next part.